Hey guys, welcome back to another video. And in this video I wanted to discuss Uber stock and where I think it could potentially be headed over the next few days. And I wanted to give my views on the potential price we could see. So I wanted to start this video by talking about this wave count we have here. And from these lows we had back in March, we actually have made this 5-wave cycle higher here. And then we kind of had this flat ABC wave that got built out where we had a double bottom here, which is what you'd usually get in a flat ABC wave. And now the stock is actually kind of setting up here. Not only on a short-term basis, but potentially even on a long-term basis. So on a short-term basis, you actually kind of have a cup and handle setting up. You've got the cup here, and then you've got the handle that just built out right here. I do think this could be the start of another 5-wave cycle higher. We've built out this flat ABC wave, so now it would make sense to make another 5 waves higher. That's usually what you'll get in a zigzag trend. I actually think there's a few ways you could go around trading this. And the way I would go around trading this is I would wait at the current moment. If we do break over this set of highs here, I would actually use these highs as a stop. And I would take a position, let's say at around 25.50, and I would use this 24.80 area as a stop. And what I would be looking for is a push to this 38.75 area. That's the 161.8% extension of its cup and handle. That's usually what you're going to come into after a breakout, is that 161.8% extension of its range. So let's say you take a position at 35.50 and you have a stop loss at 34.80. Well, you're risking only about 70 cents. And you're looking for potentially about 3 points in profit, giving you about a 1 to 5 risk reward in the trade. Now you would want to trim half of this into that 37.20 area. That's its 138.2% extension. Usually there's going to be some supply there where you might get a little bit of consolidation before a move to that 161.8% extension. So you could take this position at 35.50, trim half at about 37.20, raise your stop to break even, and then get a ride to that 161.8% extension that sits right at about 38.80. I think that would be a great trade, and it's something I'd definitely look to take if we break over these highs here. As I said, on a longer term basis, I do think this could be the start of another 5-wave cycle higher. So if you're looking to get in the stock for the long term, well, you could also take a position here. You could actually take a position today and use these lows back here as your stop loss on this flat ABC wave. So you would have a stop loss at about 28.50, and you could potentially ride this much higher. So what I think the stock could be setting up is potentially a W formation here where we actually see a break back to these highs and a move to this 161.8% extension, followed by maybe consolidation when it builds out its second wave and you backtest this cup and handle, and then you'll probably get another push higher. And this would also kind of give you something called a sheep shake, where you'd break back above this long-term downtrend line here that we have since its IPO, and then you'd actually fall back below that level, where a lot of people would probably get stopped out, and then you would break back above that level and then actually see new highs. I think this is definitely a very likely scenario here, and where you could potentially see longer term is actually the 161.8% extension of this W formation here. That sits at about 45. So in this case, if you were to take a position here at, let's say, 34.50, well, you'd have a stop loss around 5 points below, and you would be targeting about 10 points. So you'd have about a 1 to 2 risk reward. It's not really the best risk reward, but it's decent. For my personal risk tolerance, I look for a much better risk reward in my trades, but this is definitely a suitable trade for most people. And where you would want to look to take some of your position off, well, there's a couple ways you can go around doing this. So you could potentially trim half into these highs here, and then raise your stop to break even, and then you could potentially get a risk-free ride higher from there, up to that 161.8% extension at about 45. That could make for a decent trade. Or you could assume the risk, and you could ride this to the 138.2% extension, where you should most likely take half off. We could build out a 4th wave at that area and then make a final push to this 161.8% extension, something like that. I think that's definitely possible where you'd see some supply come in at that 138.2% extension, retrace some, and then you make one final push higher to that 161.8% extension. So yeah, that's kind of my views on this stock. I do think we see another 5-wave cycle higher here longer term, up to this 45 area, and I do think right now you have a decent entry on a long-term position. Doesn't really fit my risk tolerance, but for a lot of people it does. It's definitely a potential trade. And on a short-term basis, you have a really good trade, about a 1 to 5 risk to reward ratio. And I think we get a push up to this 38.70 area where I'd definitely look to take a position. I'm more of a short-term trader, so I'd most likely look to trade around this. I'd probably look to buy once we break over that level, put my stop at that 35 area, and then I would look to sell half into that 37 area, ride the rest to 39, sell the rest, and then I would probably look to rebuy if we get some sort of backtest of this cup and handle breakout. That's how I'd personally go around trading this myself, mainly because I'm more of a short-term oriented trader. That's how I'd personally look to trade this. But I do think you have a good long-term position here that offers a pretty decent risk to reward ratio. Anyways, that's kind of my views on this stock. If you enjoyed this video or it helped you out in some sort of way, make sure to subscribe and leave a like. Thank you so much for watching.